Well, American Airlines shares are sinking this morning after cutting its sales outlook for the second quarter. The airline also announcing that its chief commercial officer will leave his role next month, and this comes after United Airlines reiterated its adjusted earnings outlook for the second quarter. American Airlines has certainly been struggling to keep up with its competitors, United Airlines and Delta, both of which are up single digits this year in compared to the losses that we're seeing here from American Airlines. What happens next? We want to bring in Savi, Raymond James, Managing Director, joining us here for more on this. Savi, it's great to see you. So when you take a look at the losses that we're looking at in American Air here this morning, shares off just around 16%, the biggest drop that we've seen since June 2020. Just your reaction to this guidance cut and what exactly that means in terms of the positioning here for American.
I think we're, surprised by the level of the guidance cut, but the factors behind it is probably not surprising to us, and we've called this out before. It's too much capacity, American inclusive in the industry, and then also Americans kind of made some decisions on the corporate sales front. Some of them are smart. The way they executed it, I think, was probably not wise, and I think they're recognizing that. So I'm really encouraged by Robert Isam's comments this morning as to what the kind of go-forward solution is.
Do you think this is an American-specific problem, or is it a broader demand problem here?
Yeah, I think it's interesting where demand is holding. The interesting thing is that I think there's more price sensitivity. Peak periods, the summer, we saw Labor Day weekend, is really strong demand and not a lot of price sensitivity during that time. But in the off peaks, there's just too much capacity. And, some of the things that Americans said they will go and do is look at that, capacity that they're adding into those off peak shoulder periods.
Savi, when it comes to also the fact that their chief commercial officer is leaving, this abrupt departure, what do you think that tells us or signals about the strategy shift that we'll likely see here at American?
Yeah, and Isom this morning kind of outlined some of those changes, and I think they are, they're still in the early stages of evaluating it. This big aggressive push on NDC that they did, I think that was right. There's a lot of frustration as to how slow the community has been in adopting NDC, but doing it at the same time that you slash your sales force and make some other changes, I think was not wise. So I think they're looking at providing better support to their partners. And I think another kind of good move that they've talked about is they were going to differentiate how much miles you earn based on which distribution channel you booked. And they've decided not to go through with that. That was planned for June.
And Savi, from the SEC filing, it seems as though American has a potential revenue problem. When you compare American to some of the other major airlines, what's missing or what's hurting them more than some of those other carriers?
So they talked about, close-in bookings or close-in pricing being weak, and that's really that corporate traveler. So what you saw in the first quarter was all of its kind of major U.S. competitors that would have any kind of corporate exposure. They're showing, double-digit increases in corporate revenue, as especially the tech sector and some of these sectors that haven't traveled so far post-COVID are starting to come back. And American really only saw mid to high single-digit growth. So that's where they're seeing that shortfall, and that's why they need to kind of go back and revisit their corporate strategy.
Savi, do they cater more towards the budget carrier, just given the fact that they've underperformed on revenue?
I wouldn't say that necessarily. They are taking a very different path with their product in the domestic market, but they still have a first-class product. They still have, extra legroom seating, so they do have a premium offering. So it might be more of a function of, the areas that they're exposed to, a lot of sun destinations that's more leisure based. But again, I think, and the fact that they don't have as much, or they're relatively less kind of strong in some of the coastal markets where you're seeing the recovery now. But I really think it comes back down to, their large corporate strategy, I think, execution was not good since they rolled this out last year. And they're hurting from that now. And it is reversible, but it will take time.
So you mentioned that shift away from corporate clients, but what about the loss of that JetBlue partnership? How impactful has that been on the company?
Yeah, I really like some of the things American has tried. They've been, very creative on the revenue strategy front. And And one of those was kind of the Northeast Alliance and the alliance that they have with Alaska, which is continuing. So they've tried some creative things to do, and the Northeast Alliance would have been a good move. So unwinding that is probably a little painful and also adding to the drag. And it's unfortunate that they couldn't continue with that.
And Savi, just taking a step back and putting demand aside, these airlines, many of them, in addition to American, obviously most of them, dealing with the rise of geopolitical tensions. You also you have the simple fact that costs are rising here across the board. And then when you also step back and talk about the scarce supplies right now of new aircraft, how overall is the industry positioned heading into the second half of the year?
Yeah, it's definitely been challenging. It's been a long road, coming out of the pandemic for this industry. And you're right. You've seen this across the U.S. is that it's been a lot of inflationary pressure, and then the supply chain and other kind of infrastructure, including the air traffic control. It's been a lot of pain points the airlines are trying to move through. I think 2024 is a kind of the first year you're starting to see a little bit of normalizing, but clearly in terms of OEM deliveries and maintenance downtimes, it's still a lot of issues, and they're continuing. But the industry adapts, and I think right now the best answer is to be a little smaller in terms of capacity, so you can kind of protect the operation, and then you can manage through some of these kind of supply chain issues.
Savi, Syth, Raymond James, Managing Director, thank you so much for joining us.
Thank you.